Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. TWR Tech Video. Activate your 2-day trial of TWR All Access on the Discord platform. Stay tuned at the end for TWR Products and Services. So for today's tech video, I want to talk about an over and under market. And what we're talking about is we're talking about overbought and oversold markets. We're going to talk about some of the best indicators to utilize during these markets and, of course, how to make some money. So, of course, first we need to understand that identifying stocks that are overbought and oversold has to be an important part of establishing buy and sell points for stocks, options, ETFs, Forex, futures, and even crypto. An oversold market or stock is one that has fallen sharply and is expected to bounce. On the other hand, an overbought has risen sharply and is possibly ripe for a dump. Now, there's tons of technical indicators out there that identify oversold and overbought levels, and these indicators base their assessment on where the price is currently trading relative to prior prices. Fundamentals can be utilized to assess whether an asset is potentially oversold and has deviated from its typical value metrics. All right, so let's talk about what is overbought. Overbought is a term that's used when a security is believed to be trading at a level above its intrinsic or fair value. So overbought generally describes recent or short-term movement in price of a security and reflects an expectation that the market will correct the price in the near future. The belief is often the result of technical analysis of the security's price history, but fundamentals may also be employed in this decision process. A stock that is overbought may be a good candidate for sale, and the opposite, of course, is oversold. Now, when we're talking about oversold, this term refers to the condition where an asset has traded lower in price and has the potential for a price bounce. An oversold condition can last for a long time, and therefore being oversold doesn't mean a price rally will come soon or at all. Continuing further into it, so let's go a little bit more into overbought. Overbought refers to that security we talked about and is the subject of persistent upward pressure that has technical analysis suggest is due for the correction. So the bullish trend may be due to positive news regarding the underlying company, industry, or market in general, and buying pressure can feed on itself and lead to continued bullishness beyond what many traders consider reasonable. So when this is the case, traders refer to the asset as overbought, and you're looking for the reversal in the price, and we know this to be known as cool down. Now, in regards to fundamentally being overbought, traditionally, the standard indicator of a stock's value is the price-earnings ratio, or the PE. Analysts and companies have used either publicly reported results on earnings estimates to identify the appropriate price for a particular stock. So if a stock's PE rises above that of the sector or a relevant index, investors may see it as overvalued and pass on buying for the time being. This is a form of fundamental analysis which uses macroeconomics and industry factors to determine a reasonable price of a stock. Now, technically overbought is the rise in technical analysis, which has allowed traders to focus on indicators of a stock to forecast price. These indicators measure the recent price volume and momentum. So traders use technical tools to identify stocks that have become overvalued in recent trading, and these are to the equities that are overbought. Now, some traders utilize pricing channels like Bollinger Bands to spot overbought areas. Now, on a chart, Bollinger Bands are positioned at a multiple of a stock's standard deviation above and below the EMAs. And so when a price reaches the upper band, it may be considered overbought, and vice versa. The price reaches the lower band, you're looking at it being oversold. Here's an example I wanted to show you. So we're taking Meta. This is here recently. You got the top Bollinger Band in blue. You got the middle EMA part of it in purple, and you got the bottom in red. And you can notice where the levels have come up to the top blue line and have cooled down, and where they've come down to the red line and then have spun up a little bit. Example here. We started approaching the top level of the band, and that's the price action coming there. And then we started peaking at the midline. And then what ended up happening is we crossed that and we actually started reversing to the downside, going lower into the bottom level, selling off. Now, I do want to note that when you see the Bollinger Bands widen, that's also a notice of volatility increasing with the momentum of the stock. You can see it again here. Now note, Meta has been on a run lately, right? But you can see it right here. We peaked above the line, and then what happened shortly after that? The cool down happened, right? Now, we didn't go past the midline, but still, that's a significant move. You know, about a 290 to almost 280, a $10 drop. That's money-making opportunities, and you can see it happening again. We cooled down, and then we started hitting the bottom, looking like we were getting towards the oversold. And boom, we pop back up, heading back up into the overbought, and vice versa, continuing the trade. So now that we understand that, let's talk about what does oversold tell us. Well, oversold to fundamental traders means an asset is trading well below its typical value metrics. Technical analysis are typically referring to an indicator reading when they mention oversold, and both are valid approaches, although the two groups are using different tools to determine whether an asset is oversold or not. So, fundamentally oversold stocks or assets are those that investors feel are trading below their true value. And this could be the result of bad news regarding the company in question, a poor outlook for the company going forward, and a poor favor industry or a sagging overall market. And traditionally, a common indicator of the stock value, of course, again, is the PE ratio. And analysts and traders are publicly reported financial results. They utilize those estimates to identify an appropriate prices for these particular stocks. For example, if a PE dips to the bottom of a historic range or falls below the average PE of the sector, the investors may see the stock as undervalued, and this may present a buying opportunity for long-term investors. For example, a stock that has historically had a PE ratio of say 10 or 15 and is now trading at a PE of maybe 5 could signal long-term investors to look closer at the company. And if the company is still strong fundamentally, the stock may be oversold and a good buying candidate. Now, careful analysis is needed, though, as there could be good reasons why investors no longer like the company, but it could just be overall market weakness and just a sagging economy. Traders also like to use technical analysis for oversold items as well, and they can use the indicators to establish these levels. Technical indicators only look at the current price relative to prior prices. It does not take into account the fundamental data. George Lane's Scholastic Oscillator is one of the most popular, and he developed this in the 1950s, and this examines recent price movements to identify changes in the stock's momentum and a price direction, and you guys might know this as RSI. Essentially, the indicator is telling us that the price is trading lower third of its recent price range. And this is to say that the price will bounce immediately, because it may not. However, many traders wait for the indicator to start heading higher before buying into it, since the oversold conditions can last a long time. Basically, they're looking for that confirmation. And the Bollinger Bands can be utilized in this overbought only towards the lower end of the oversold area as another means for confirmation, as well with some other indicators. And we're going to go into those RSIs and the scholastics here in just a moment. So these are really the bread and butter when you're talking about overbought and oversold. Two most common charting indicators of the overbought and oversold are the relative strength index, or RSI, and stochastics. I always say scholastics, but I know it's wrong, but it's stochastics. Technical analysis has provided traders with increasingly sophisticated calculations to identify overbought stocks. Of course, we're talking about the RSI, and this was developed in the 50s, and this examines the recent price movements to identify imminent changes in a stock's momentum and pricing trend. This oscillator laid the foundation for the technical indicator, which has become the primary indicator of overbought stocks, and that's the RSI. So the RSI measures the power behind price movements over a recent period, and typically it's 14 days utilizing this formula. RSI equals 100 minus 100 divided by parentheses 1 plus RS, where RS represents the ratio of upward momentum in a downward element over a specified period of time. A high RSI is generally received as 70, and it signals traders to think that the stock may be overbought and that we're looking for a correction with some downward pressure near term, and especially long run of successfully higher prices. An RSI level of 30 or below is considered to be oversold, and many traders utilize price channels with the Bollinger Bands to confirm this signal that the RSI generates. One of the things is Bollinger Bands are on an overlay on the main chart, and the RSI is usually a sub-indicator. So that you get your sub-indicator, you got your price action on your main chart, utilizing your Bollinger Bands, and now you got, one reason, two reasons, three reasons why to push the buy, and you're looking for that confirmation to make sure that your idea is confirmed. So on a chart, the Bollinger Bands is one standard deviation above and below the exponential moving average of the stock's recent movement, and analysts identify that the stock with the RSI and the price is edging at the upper edge of the Bollinger Band is considered to be overbought. Going back to that example, just so that you can have a refresher, it's right here. So the overbought indicator on this one that I have set up would be blue. The oversold would be red, and your midline is that purple line, which I like to call the battle zone. So when you're thinking this in terms, and especially if you're utilizing this along with the RSI, which you can see I have the stock RSI on the bottom, you're looking for confirmation of both. So when we're looking for an overbought type of play and we're playing the reversal to the downside, we're going to look for maybe this. Looking at the RSI, seeing that we're overbought, looking at the Bollinger Bands, price action is peaking towards the top. We're looking for a potential reversal, and fair enough, it did end up reversing, and we went down about a 5-point move to the downside, which is fantastic, especially if we're trading options. Confirming another move on the RSI, we look at it here. We're looking like we're crossing and kind of pushing back up. We didn't quite hit the oversold, but we reversed our direction and momentum, and we hit the midline in the Bollinger Band, and the price action shot to the upside. So great opportunity to go ahead and go long and ride some momentum back up to the top, going to see until we start peaking at the top, looking like we're oversold again, overbought again, at which point we'd reverse course. We'd go with the short side of the house again. So it definitely does take practice. It definitely is a good indicator. Nothing is perfect, but utilizing that, 3 reasons why to push the buy might get you a great opportunity to make some money. Now, these stochastics, right? Now, while the RSI is calculated based on average gains and losses, the stochastic compares the current price level to its range over a given period of time. So stocks tend to close near their highs in an upward and near their lows in a downward. Therefore, price action then moves further from these extremes towards the middle range and is interpreted as exhaustion of trend momentum. And these are the ones I really like to trade. As you can see, my preferred RSI I use is a combination of the stock plus RSI because I like to play the exhaustion plays. A stock value of 100 means that the price during the current period closed at the highest price within the established time period, and a stock value of 80 or above is considered to be overbought, and below or 20 below is oversold. Like the RSI, the default setting for the stock is 14 periods, and the reason why I like this one is because it gives me 2 lines. And basically, I like to utilize the K and the D. I use my K as my signal and my D as my line. So anytime my blue crosses my orange, I look for the trade going in that direction. So if the blue were to cross the orange to the downside, I'm looking at the main chart. seeing if it makes sense. Looks like we're overbought. I'm getting my confirmation. I go ahead and pull the trigger, take the trade, hopefully write it down until I start to see the blue cross to the upside of the orange, confirm. Indeed, we started to change momentum, and we go ahead and come out of the trade and hopefully made some money on a decent point value. It ain't perfect, and it doesn't work all the time, but it's consistent, and it works more often than not. The big variable on whether it works consistently or not will always be volatility and market chop. So, in conclusion, overbought and oversold markets are great for profitable trades off of reversals and rejections from support and resistance levels. Indicators are your go-to for confirmation on trend, and none other are better than the RSI and the stochastics. Both have strengths and weaknesses, and the indicators are best used in combination with other tools designed to establish the optimal buy and sell points. Finally, there are times when a stock or commodity and market can stay overbought and oversold for considerable times and periods before a reversal. Therefore, overbought and oversold signals from RSI and the stocks can sometimes prove premature in the strong trending markets. All right, team, that's all I got for you on the tech video. Please remember, TWR is here to bring you thought-provoking content to like-minded traders and investors so that you're not alone in your trading and investing journey. The goal is always to grow, learn, and share and make some money as a team of market warriors. Remember, the market is our war zone and stocks are the battle. We want to make that market bend the knee in 2023, and with TWR, you bow to no one. As always, let's go to war together. TWR Products and Services. All right, team, our next class is set on 22 July at 1 p.m. Central Standard Time. We are going to teach you how to utilize level 2 stock data to catch big money reversals. Guys, Shiner is going to break it down. With 37 years of stock trading experience, he's going to teach you guys the essentials when looking at this data. Many people see this all the time on their phone, tablet, or computer, but they don't quite understand what it really means. He is going to break it down so that you guys can really dive into it, understand it, and catch these big money market maker institutional reversals and ride the wave for huge profits. This is a must-have class, especially if you're serious about your money and you're serious about trading and investing. TradersWarRoom.com/upcoming classes where you get your link. The link is in the description. Every purchase gets a recorded copy, and I will see you there in class on 22 July at 1 p.m. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this, or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at TradersWarRoom.com. Let's go to war. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone, every budget, and every style. Join TWR today and trade with the bulls. The market is our war zone and stocks are the battle. Join TWR and let's go to war.